Hey everyone, this is Ryan Mallory for SharePlanner.com. Today is January 16th, 2015. Going to go over the market today. Going to go over really the market leaders. This has been a really light week of trading for me. There was times when earlier in the week where I was short, and then I covered on Wednesday. Then I got long on UPRO and still hold on UPRO as we speak right now. But it's been a very, very rough week for the market in general, and just trying to find stickiness to this market is difficult as well. Obviously, except for today, the market's been down every day this week. We closed Friday down, and then Monday through Thursday this week was down notably. We didn't have any strong washout days like we had seen back in early December, or early January, late December, or back in December, or for that matter, back in October. But what we have had is this consistent drip, lower, or 5 days straight. And it's 15 to 25 points every day. And but nothing like 45 to 50 points or anything like that. But it's just a steady, consistent sell-off. And then the other thing, and SPY really shows us good, the sell-off has really been difficult, even from holding short positions to manage, because you got 3 days to the downside. Okay, that was good. Okay, but it came on the heels of a really nice bounce that looked like, okay, we're probably going to go challenge the new highs. Not so fast. We gapped up on the third day of the bounce and then sold off the rest of the day thereafter. So there's a good chance you didn't even get short in that time period because of how quickly the market sold off. And if you did get short, you weren't probably dealing with a full position if you're worried about risk at all. And then the next day, obviously, was probably the best day, and then the day after that. But to see the third day of the sell-off, what made it so tough is it almost gave you this appearance that the market was going to maybe even try to resume the uptrend by bouncing higher and then getting sold off again. So that was difficult. And then finally on Wednesday, you had a nice huge push down lower, but then the market just bounced right back up throughout the afternoon, and it was setting up again, and it did it right off of support from the lows of January. It made it look like, okay, we're going to have another bounce, because we've seen time and time again where when the market sells off and then it finishes higher than where it opened the morning up at, you can go back to October, and you could see where it did that, and it led to a humongous rally. So that made me as a short trader, quite honestly, a little bit nervous about wanting to hold short positions into the next day. And then obviously you had the Swiss franc decoupling from the euro and everything else, and we opened up higher, we go back lower. So at first it looks like, yeah, we're going to get some follow through. Oil's spiking 8% at one point during the day, and then boom, the trap door comes on the bulls for this market, and it just sells off the rest of the day. And then you have today where the market's down 20 points overnight, and then it rallies back, and now we're up 14 point, or no, more than that, about 17 points almost. And so it's a 37-point shift from where we were at overnight on the futures market to where we're at today. So it's a big move in these markets every single day. And I think you got to go back to December 29th that we haven't had huge plus 20-point swings in this market on a daily basis. That does make trading very difficult when your primary concern is managing risk, because and I tell members of the Share Planner Splash Zone this all the time, risk has to be your first priority. Now, in these markets, and I said this earlier in the chat room, and I'm going to say it again here, I could swing for the fences to try and be the hero and say, you know what, I'm going to go guns blazing all in one direction. I'm going to short this market and make subscribers 10%. But on the flip side, what I'm ignoring is the fact that I could easily lose them 10% or even 20%. So the goal there is not to get full tilt short. It's not to get full tilt long or anything like that. It's really to try to manage risk first and foremost in this market, and then try to take short positions or long positions depending on the market direction and what the market allows. But you can't test the waters with both feet, or you're going to sink to the bottom. So yeah, this week I think at the most I got like four positions short at one point intraday, and by the end of the day I don't think I had any of the short positions left in the portfolio. But it's about being nimble. So instead of trying to aggressively trade this market when it's doing the crazy stuff that it's doing, and you got all these macro events affecting it, from oil to the Swiss franc to terrorist attacks and everything else, you have to you can't go after 10% moves in your portfolio at the expense of risking 10% of your portfolio. You have to wait for the right conditions to where you can make, say, 5% at the risk of losing 1%. Those are the kind of conditions you really want to be aggressive in trading, or make 10% at the expense of possibly losing 2%. Those are more favorable risk reward environments. This kind of environment, if you are wrong, and it is so easy to be wrong in this kind of a market, you're going to pay dearly for it, because if you are wrong, if you're full tilt short to coming in today, you're taking a beating right now. Okay. You're probably taking a 2 to 3% loss in your portfolio. Okay. So that's why it's important to scale back when the market direction is becoming much more uncertain. Yeah, I know there's people out there saying, "Oh, this is the 2015 is the year of the bear," and oh, this market's changed. It feels different this time, and it's going to go down. But that's fine. But it might not go down right now. And in the between time, you have to deal with your own emotions. You have to deal with the own fact of seeing red in your portfolio. So don't get caught up in the longer term view of the market. Just go off of what it's doing right now. And quite frankly, nobody knows what it's going to do right now. So you have to look for tiny, silver linings, and you have to look for edges in the market, and then you just test the market. Okay. So if you test it and the position's going well, okay, maybe that's an opportunity to add another position, okay? Because you got some gains already in that position. You want to try to see if you can start building a portfolio position. And then or multiple positions in your portfolio. But the fact of the matter is that right now it's almost impossible to do that. I mean, you're having massive swings in both directions. So in any case, let's go ahead and I've talked about the S&P here quite a bit. Obviously, you got some significant support level that if it were to break, let's look at the S&P instead of the SPY. But if it was to break below and close below the December or January lows, that would be pretty significant. And even more so if it can get below those December lows, that would definitely be a reason to avoid all long positions. So right now we're trying to bounce. The dip buyers are trying to hold support here. When you look at the Nasdaq, you have a similar situation. Support here off of the December lows is critical to holding for this market. If it doesn't, you're probably going to see additional selling come down the way here. You can see here on the Russell, despite all the movements we've seen out of it over the past year now, it's still stuck within this range. I mean, it can't. I mean, back in late December, it looked like it was going to break out, and that would have been an unbelievable trade. Still, we are stuck in a box range, and trying to trade the Russell, I would even try to trade it with IWM or TNA, TZA, whatever. It's just range bound. Now let's go ahead and look at some of the market leaders, because I'm talking about in the title of this Google Hangout how there's a lack of market leadership from like your traditional stocks like Apple, like Facebook, Google, Amazon, and then you got some of the higher flying stocks like BABA and GoPro. So let's just go ahead and tackle these one at a time. We'll be quick about it, but it's just good to see what I'm talking about. Apple has basically a descending trend line going on here. You look at the chart. You have a very bearish scenario, and it's down yet again another 1% today, which is going to make a lot of people believe, okay, is this stock going to go back sub 100 and possibly head for support here at around like $97, $98 range? Very, very possible that we see that. Apple is not showing any kind of leadership in this market anymore. Market's up almost 1% today. It's down 1%. Facebook, some signs of life a couple of weeks ago, but here again, it is just puking all over itself, down 5 straight days heading into today, bouncing a little bit, but it's almost having to because it's right there at support at 73.60. So it's held that support level pretty good, but you can see where, okay, if it's going to get below, you can maybe be a little bit more liberal about it, but let's say if it gets below like, yeah, I mean, I'd say below 73.60, this thing's going to get a little bit more bearish on you. I mean, nice bounce today, but I'm not so sure how much it can really hold. BABA, and this one, it's broken support. It's below 100. The key area to get short was around 101. There were some members in the splash zone that did that and did it successfully. I didn't partake in the trade. Obviously, hindsight 2020, you always wish you were a part of every trade that would have been a winner. But yeah, this is a stock as well that's just continuing to see more and more deterioration. It's given up a lot of the gains that we saw back in October and November, and you know, it's just it's trying to catch a bid and it's just not doing it. Then you got GoPro, similar story, but even worse. Traders' dream was earlier in the year was trading the stock, and now it's just falling all over itself. But interesting here that as I was just pulling it up, there could be some support there for GoPro if you look at the highs from back into like July and back in, what is that? Yeah, that's July too. Maybe there's some support for GoPro at you know, 42, but because GoPro is such a relatively new stock, the technical analysis is going to be somewhat weak on it because there's just not a lot of price history. You're only going back about 6 months on it, and in a lot of cases that's fine. But when it's in this free fall like this, you're trying to find, you know, previous levels of support that it might be able to bounce off of, and there's just not a lot of it. So you got a lot of resistance, you know, overhead that it's not even close to testing in the near future. And GoPro, it's a falling knife. I wouldn't even try to trade it at this point. Google. GOOG or GOOGL, you know, we'll do GOOGL this time. But yeah, this one here is violating support. It's bouncing right back into that support at 510, 511. Right now it's trading at 509. I'd say this looks more like a bear flag, quite honestly, than the end of the sell-off. You know, if the market rallies, a good chance that Google will rally with it just out of sympathy and because it's so extremely oversold over the last 3-4 months. But right now, I don't see where the chart pattern is necessarily telling us, hey, it is priming itself for a bounce here. Instead, I think it's still a bear flag, especially if the market weakness continues next week. And then finally, Amazon. This one's holding on for dear life. I'd say this is like life support here for Amazon. 285, critical support level. If it's going to break below that, let's say it gets below 285, 284, this thing could have a long sell-off, quite honestly. I mean, you got a massive distribution pattern here. It's already had a significant sell-off back when it was back in early January. It sold off significantly, got basically a dead cat bounce out of it, and now it's looking to do the same thing again. I know I got a lot of lines on this chart here, so my apologies for that. But you got years of technical analysis that I do on these things, and I tend to not delete the lines. So when I'm doing these videos, you can sometimes see my year's worth of work. What I wanted to point out here, though, is you have this long-term descending triangle, and descending triangles are bearish. So yeah, below 285, I'd say this would probably be a good short to get on top of. So that's going to do it for today. You know, be careful with these markets. They're not reliable right now. They're very erratic and hard to gain an edge in. I would say the month of December and month of January have been very difficult and inconsistent markets, especially from a swing trading standpoint. That doesn't mean that you can't still weather the storms or you know, the biggest thing is avoid losing money in these markets. And if you're doing that, you're doing a good thing. So stay nimble, you know, take stop losses if you're going to trade some, but don't trade too heavy. Flexibility is key, and wait for the market to come to you to make a trade. So that's going to do it for today. You all have a great weekend. Spend some time with family. Don't forget the market's closed on Monday. So, yeah, no trading on Monday, and take a little extra time to relax, sleep in, and enjoy yourselves. God bless.